Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Hope you guys are doing fantastic. Happy Friday, everybody. Well, rates ended up this week a little bit better than where they ended last week. Not as much economic data that was introduced into the market. The market basically spent the time this week kind of digesting through the multitude of information that was released the previous week. Last week we saw a lot of stuff that came through. We had the Fed meeting with no real big surprises. GDP came in with a real positive increase of 4% versus the negative 2.1 number the first quarter of the year. And then also on Friday of last week, we saw the jobs number come in showing about 209,000 jobs added, which was a little bit off the expectations, and the unemployment rate going up a little bit to 6.2%. So that was all last week. And this week we just really didn't see very much economic data, but it was really digesting through all that stuff. And basically, at least as it pertains to interest rates, we saw the market actually perceive that, all this stuff is actually going to be good for interest rates going forward. And the reason is that the Federal Reserve really has what's called a dual mandate. They're supposed to keep the unemployment rate as low as possible without having inflation become too far out of control. And right now, the inflation number, the target, is for inflation to be at about 2%. And right now it's running at about 1.6%. So we're still under the Fed's target of inflation. And for the employment number, the unemployment rate, the Fed's target rate now is between 5.2% and 5.5%. So that's the optimal level of employment that the Federal Reserve would really like to see. And right now we're at 6.2. So the bottom line is that unemployment rate is actually a little bit higher than what the Federal Reserve would like, and inflation still is lower than what the Federal Reserve would like. So the market is perceiving that we still have room through all of 2014 and possibly into most of 2015 for the Fed to continue to keep interest rates low, which is going to probably keep mortgage rates low. So because the interest rates that the Federal Reserve is talking about is the Fed funds and discount rate, and interest rates in terms of what the mortgage industry looks at is just what the 30-year fixed rate is. And so if the Federal Reserve is keeping Fed funds and discount rate low, that should also keep interest rates low as well. So the market has perceived that things are actually pretty good again for the midterm and short term, that interest rates will remain low through 14 and possibly into the majority of 15. Now things can change, but it looks good for interest rates for the remainder of this year as well into at least the first part of 2015, and then we'll see what happens. The other thing that's going on right now is that the stock market last week suffered some pretty big losses. It was about the worst last couple of weeks for the stock market in a number of years, which normally when the stock market does bad, interest rates rally and improve dramatically, and they didn't really do that because of the stock market. So we're seeing some weakness in the stock market due to the fact that there's the quantitative easing is ending and the tapering has almost is done. So there's no more quantitative easing and there's not as much money flowing to help buoy the stock market. And we didn't see that really cause interest rates to improve. But if the stock market does continue to suffer and it's rebounded a little bit, that might also really help interest rates, as well as we're also seeing in the European countries that there could be some more signs of possible recessions. Italy had some issues, and Argentina is back into a recession, it looks like. So if we still see some global economic instability, that might help interest rates as well. So things are are looking well for interest rates to remain low and to keep the housing market from really having major problems. So that is a good thing. We'll let you know what happens next week. If you guys have any questions, please give me a call. Thanks for joining me with Java with Jared, and we'll talk to you soon. Bye-bye.